Hey, welcome to the show. I'm Mitch Goldberg. It is definitely it's an upside down world, right? So we all know the news, and the point of the show is not to repeat the news and for me to become a news show and just watch cable TV and repeat what everybody knows and ask the same questions. But it's important to talk about the news and how it will impact the economy and how it will impact the stock market, the bond market, interest rates, and most importantly, your investing for retirement, right? So that's really the most important thing. So we're going to do that. We're going to put things in perspective. Stock market actually had a pretty good day. Oil is lower than it was when Israel started bombing Iran, and it just tells you how different the world is than the last time we had a big skirmish or started a big skirmish or entered into a skirmish in in the Middle East. And there's a couple of key reasons for it and what it means. And for those who uh, didn't invest or change your investing based on geopolitics, I just want to reiterate time in and time again. Was it time and time again? I reiterate here, don't make moves based on geopolitical events. We get through them. The market goes back to focusing on the economy, on corporate earnings, on interest rates, and the things that actually matter for wealth creation. Let me roll a quick intro and then I'm going to talk about this. If you have any questions, please ask me in the comments. I love hearing from you. And if you don't mind, while you're watching, give us a thumbs up. It just helps, spread the news of the show that we're doing, and it's all educational. Here we go. All right. Thank you for joining me. My name is Mitch Goldberg. I'm with the wealth management firm Client First Strategy. We talk about markets, we talk about all things investing, money, borrowing, spending, retirement, in retirement, getting ready for retirement, sending your kids to school, getting started. This show really is about personal finance. So, it used to be, I sound like such a veteran. I almost said such an old guy, but I'll say I sound like such a veteran when I say that. But it used to be when oil spiked up, the stock market would plunge because that could throw us into a recession. A couple of things you should know. Our economy is not as industrial centric as it used to be. Number one. Number two, the a giant equation, the thing that has changed the world order is shale oil. That has changed everything, and I don't think it could be overestimated how much that's changed the world. But you know, the United States after World War II created a new world order where the U.S. Navy would patrol the oceans, freedom of navigation, and most importantly, so we could get our oil. But we're pulling back from the world stage. It started over 20 years ago. It continued under Trump. It continued under Biden. It's continuing now under Trump. We don't need to pay for the world. The United States is less interested in doing that. For protecting the world militarily and protecting freedom of navigation of the seas. So it's changed a lot of things, and it's made Iran much less relevant to the world, even though Iran's military is shoddy. And don't mind me, I couldn't do the live streams last week because I had COVID. I'm still getting over it. I was dying to do a live stream over the weekend, but I just felt so lousy from the COVID. I've had COVID a couple times, but this one was a doozy. Okay, so Iran picked a fight with Israel. Iran got its butt kicked. Israel took out their air defenses, and then they felt that Iran is getting too close to developing a nuclear weapon, which would be used to annihilate Israel. So Israel preemptively struck Iran. The United States saw an opening and decided it's unpalatable for the United States for Iran to have the bomb as well. That's what we used to call the nuclear weapons. We used to call it just, quote, the bomb, right? That's what we used to call it. So they really just folded. There's nothing, basically Iran has no defense. Today they launched a couple of missiles. They supposedly warned the United States they're going to fire a couple of missiles at an American military base in Qatar. It didn't do anything. All the missiles were shot down, and it looks like Iran just is shooting at us with a pea shooter, and they're just trying to save face with their own population. From what I understand, they've turned off the internet in their country, and leadership there is pretty worried about regime change. So that's what's going on there. How does it affect us? You would think that after the news that the U.S. bombed 3 Iranian nuclear development sites, that the stock market would go down Monday and oil would go up. And at first, the stock market, the futures were indicating a small down day, but a big up day for oil. Turned out oil plunged in value, and all that talk that oil is going to go to maybe $3.54 a gallon is gone. Nothing happened. The Iranians' retaliation was almost non-existent, and there's really nothing that they could do. Could they close the Strait of Hormuz, where 20% of all the world's oil production passes through? They could, but if they do that, they're choking off Qatar, UAE, they're cutting off Saudi Arabia, and that would just create a wider conflict that Iran can't really fight right now. The other thing it would do is it would hurt China, because something like over 90% of Iranian oil goes out to China. So China doesn't want that strait to be closed. Also, plus, if Iran does that, they would not only piss off their biggest customer, but they would lose access to much needed money. So there's really basically no response. The world will march on, and this is not really an economic event. Okay, it's not. It's not something that is going to really impact the economy in any meaningful way. So, if you want to know why the market went up, that's why. If you want to know why oil went down, that's why. And the United States just doesn't need to be as intertwined with its Navy, patrolling the 7 seas, in particular, sea lanes around the Middle East, oil-producing regions. So, I'm not saying it's not a big deal, but economically, it's just not a big deal. We will get back to talking about tariffs in very short order, and we will continue to look for economic statistics that either show us inflation is picking up or not. Now, people, economists were expecting inflation to pick up in May. It didn't. June is almost over, so in like another week and a half, we'll get the June figures. We'll see, but right now, corporate America is so far in pretty good shape. Consumers are slowing down a little bit. There's definitely some points of weakness in corporate America in the economy, but so far it's just not really bouncing. It's not really pinging off the stock market as of yet. So remember, when you talk about the economy, the corporations are basically set up to serve people with money. And I know we talk about how people in Medicaid and how they're affected and all that, but that is not, I don't think that really affects how many cars GM or Toyota sell or how many meals Chipotle serves. The people with money still have the money. Unemployment rate is still very low. Until we see those things change, I think people continue to spend money. Now, they might buy fewer things because of inflation. They will. But it's corporations have adjusted. The economy has adjusted. It's really hard to find things to not like in the economy at the moment. There is weakness around the margin. I'm not debating that. I have come out many times and said tariffs could hurt because it could be inflationary and people buy less stuff. Taxes are a tax. Private American corporations pay the taxes, pay tariffs, and that money goes to the U.S. Treasury Department, just like a tax. So it is a tax. But we haven't seen any knock-on effects yet in the economy. And that's what we're waiting for, and we'll get back to that. that's something that I think uh, that's something I think would be a much much bigger deal than what's happening in the Middle East. I know we like to talk about. I mean, it's not that we like to talk about wars, but these are pretty substantial, heavy duty moments. They're very stressful, but we're just not marching to the same playbook that we were marching after 9/11, when the United States decided to attack Iraq in a preemptive strike because supposedly Iraq had WMDs, weapons of mass destruction. And incidentally, we have had wars and 20 years of war in Iraq and Afghanistan. I want to remind investors that the stock market did very well in that time frame. Uh, it's hard to find any time when wars did not, it's hard to find a time when wars hurt the stock market for a prolonged period of time. By the time World War II ended, the stock market was already going back to its old highs. And things move much quicker today. Wars are different today. I'm not saying it's different today, but that's why the stock market did so well. And I think people are just paying attention to the wrong things. Geopolitical events. By the way, if you would look at my LinkedIn post today and my Facebook post today on our Client First Strategy page and my Instagram page, I posted a short video today talking about how geopolitics don't really have an impact on the stock market other than maybe a very short-term blip. It's worth taking a look at that, and it's worth it for you to know that if you're a long-term investor and the stock market goes down and you're still dollar cost averaging into your 401k plan, you want the stock market to go up. The stock market being up now and staying near all-time highs, this is great for people who are close to needing their money from the stock market. Not so great if you want to start investing now. So a down market for many of you is actually your friend and not a reason to stop investing. But nevertheless, we're not making decisions on geopolitics. We're making decisions based on our clients' needs, based on their glide path to when they have to start taking money out of their portfolios so they could flip the switch from their active income from their job to their passive income to pay for their bills from their retirement assets and savings. All right, so that's the show today. I thank you so much for watching. Stay calm, stay cool. If you need anything, you can reach us and we'd be happy to talk with you. Have a great day. Bye.